Welcome to the Lend Academy podcast, episode number 227. This is your host, Peter Renton, founder of Lend Academy and co-founder of the Lend It Fintech Conference. Today's episode is sponsored by Lend It Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th, 2020 at the Javits Center in New York. Lending and banking are converging, and Lend It Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lend It Fintech, lending and banking connected. Go to lendit.com/USA to register. Today on the show, I am delighted to welcome Mike Butler. He is the president and CEO of Radius Bank. Now, Radius Bank is a very interesting operation. When Mike joined as CEO back in 2008, they were a small community bank with just a handful of branches. Now they are one of the leading digital-only banks in the country, and it's really a fascinating story to unpack how that has come into a reality. And so we talk with Mike about the decision to become digital-only, how he's been able to sort of develop this without really an engineering team, which is a fascinating all in of itself. We also talk about the partnerships, some of the recent ones they have penned, and their sort of how they approach banking as a service in general. And we talk about Mike's thoughts on the digital banking space that is all of a sudden very hot, one of the hottest areas of fintech. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Mike.
Well, thanks for having me, Peter. Much appreciated.
My pleasure. So I like to get these things started by giving the listeners some background. Maybe, we know you've been with Radius Bank for many, many years, but what did you do before that?
Well, I was a pretty traditional banker, Peter. I, out of college, joined a management training program with KeyCorp. Mm-hmm. We started out as $4 billion, and when I left, we were over 100. Did a lot of different things while I was there, had the opportunity to participate in some M&A activities, ran a fairly big credit group, and ran 2 lines of business before I left. And that was in, 2008, where I joined Radius Bank.
Okay. So what was behind that decision then? Obviously you've gone from a pretty decent sized bank into a very small community bank. What was the thinking behind that transition?
Well, I think a couple of things. One is probably as easily would say as there was a transition happening inside Key in which there was a leadership change, and obviously there was going to be a new CEO for the next 10 years or so. So it was a good time to pause and think. I think it was a bit of an itch from my perspective to see if I could leverage some of the things I've tried to learn over my years and kind of see if I could find myself in a CEO role. We all say that nobody really drives culture other than the CEO, so a chance for me to do that. So I took the opportunity to look around and see what other opportunities there might be out there for me.
Mm-hmm. Okay. So maybe you could just describe a little bit about Radius Bank and what it was like when you joined it back in 2008.
Well, Radius was a fairly traditional community bank, but one in which it was truly seeking kind of a strategic direction. That's what was most intriguing to me. It had kind of just been a marginal performer and was looking for some leadership to come in and give it some direction. And as we talked a lot about what the future of the industry was going to be like, and the role of branches and deposit gathering. And I think it was an opportunity for me to kind of take that vision and try and execute it inside Radius Bank. But we were a 9-7 branch company, did a lot of commercial real estate, very locally, pretty traditional community bank.
Mm-hmm. Mm-hmm. So then when you took over, you famously now, I think it was 2012 or thereabouts, you can correct me if I'm wrong, where you decided that you would do away with the branches you had. Was that your intention always going into this job, or was this something that sort of evolved over time?
Well, the intention was to, and as it is today, still remains, is how you replace the branch network as a place to acquire and manage consumer and small business deposits. That was always the objective. And I think, remember, in 2008, there was some pretty significant the economic downturn was occurring. So what we did first was we stabilized the company, and we started to implement some of the thoughts and ideas on how we might emerge as more of a virtual bank. And that was in 2012, where we said, okay, we're gonna go there. We're gonna be all in on the concept of generating deposits and managing clients through a virtual network.
Mm-hmm. I mean, what was that decision like back then? Because really, you were a bit of a groundbreaker. It's not like many other community banks were treading down this same path. Was it a really difficult thing to get buy-in from everybody?
Well, yeah. I mean, for sure. There's no doubt about it. I think what I like to say is there wasn't really. I mean, I think everybody's vision still was, and still is today, and it's getting clearer and clearer that virtual or digital banking will become a much bigger part of the industry. Less clear back in 2012, and
right.
A lot fewer people willing to take the gamble. So I think you needed this kind of conviction to the vision, and you needed some courage that you were gonna be able to execute against that, and then you had to start to surround yourself with people who had the same vision and courage to get that done.
Mm-hmm.
And that's a bit of a daunting task, because I think, as you know, in a lot of industries and sometimes more in banking, is that people are a little bit more willing to hold on to the status quo than they are to kind of embrace the future, which is okay. I get it. I'm not being, not complaining, but what we had to do was start to transform the culture of the board and the organization kind of simultaneously. And, one of the things that I did make a fairly big decision on is by closing all the branches, we basically had no backdrop. There was no, let's try this.
Right.
And let's see if we can do some things virtually while simultaneously, keeping the branches open. And it's one of the things that I would say gave us what I thought was a cultural competitive advantage is, kind of the bridge was gone behind you. There was only one place to move, and that was forward.
Right.
So we were forced to kind of keep, moving in that direction.
So then has that really changed? Like, I imagine that the culture is very, very different now than what it was 10 years ago. Tell us a little bit about what it's like today.
Yeah. So, right from the top, we were recapitalized in 2016, and we had the opportunity to bring in a new board. That new board contains some of our equity investors who are absolutely believers in the vision, as well as people in the industry that are a part of this technological change versus some traditional bank boards. And as importantly, the people that we've brought in have a much, we used to say in the industry that you should hire bankers first, and then you can kind of teach them stuff from there. And what we have said is, no, we're gonna hire non-bankers, mm-hmm. and we're gonna try and teach them what parts of the banking model we still need to keep. And that created this whole thrust of every time you add a person to the team that has a different view about, or their view is about the future of digital banking, not how to transform a branch. So a very big part of what we've been able to do is all of the people and the way we go about doing business inside the company. We'd like to say that we're much more of a business than we are a bank, and we'd like to say we're much more of a technology company than we are even a business. So a very agile mindset that started with kind of the project management group where it usually starts, but we kind of saw how cool this agile kind of environment worked, and we all said to ourselves, we're going to kind of embrace that in how we approach all of our business challenges day in and day out. We've kind of broken down traditional hierarchy inside the company and the bureaucracy sometimes that exists, and we've gone to majority of cross-functional teams, and everybody has cross-functional goals to kind of make sure we get projects done. So a whole bunch of really fun stuff, and I think the culture of the company is also one in which we we kind of say to ourselves, we treat people like adults and a very open environment for people, and we think that creates a very high-performing work culture.
Mm-hmm. Sure. So let's talk about the bank itself. And when I looking at Radius Bank and reading about you over the years, you really have a couple of separate businesses, it feels like, or business lines, shall we say. I mean, you've got the traditional bank that still has the deposits and lending, and you also have this sort of banking as a service type operation. But maybe rather than me describe it, why don't you describe how the bank operates today, the different product lines?
Yeah, so we've kind of said from the very start that strategically our mission was to be a kind of forward-looking financial services company with a very sharp focus on deposit gathering, liability side of the bank, and was focused on finding and sourcing deposits and managing depository relationships on the retail and small business side without a branch network driven by technology. And also we felt like and still feel like we have a competitive advantage over several organizations that do generate deposits digitally, the neobanks, because we've got a fairly sophisticated asset generating side to our balance sheet as well. And that's driven by the same kind of culture that we talk about on the liability side, in which we want to have very niche-oriented businesses in which we can kind of provide a high degree of service to our clients, get paid accordingly, but those niches would be different than what you would generally see inside community banking. We do equipment finance, we do SBA lending, we do some high net worth lending. So all of those would be designed to say, okay, if you thought about kind of the technology, the fintech world, and the emergence of specialty firms that offer some of these lending products, we tried to set up kind of like niche businesses in accordance with that as well. Mm-hmm. And then along the way, we've developed this kind of what I call banking as a service, but that really emanated from our commitment to our core business of deposit gathering absent the branches. So we only do banking as a service because we feel like we're very good at gathering deposits and serving our clients from a technology perspective. We've done that through partnerships with fintech, so we know how to work in the fintech environment. And we're fairly kind of optimistic about fintechs in general, and that there will be and continue to be disruption. And we think there's ways for us to partner with that rather than ignore it, and that's where banking as a service kind of evolved.
Mm-hmm, mm-hmm. So as I hear you talk, I would expect that you would have a large engineering team in-house to sort of help you with this. But I was, at Lendit this year, I went back and re-listened to the session you did, and you mentioned that you actually don't have an engineering team at all. So just tell us a little bit about that and how you can be an online bank offering banking as a service and not have a big engineering team.
Yeah, well, I would say that some of my employees would probably take exception to not having kind of engineer mindsets around here. So we've hired a whole bunch of people that do have an engineer mindset, but we don't really have our own engineering team. And that was another decision we made a while ago, in that we felt if the disruption that was going to come from the fintech environment was real, then that sector would have the best engineers and the best ability to deliver superior product service than we would building it inside a financial services company. So we made this decision that we were going to partner rather than develop our own, and that has served us really, really well, because what you find is the fintechs that we've leveraged along the way to redo our technology stack have benefited from our relationship, nicely. We have as well, right? So we've also made strategic investments. So making a strategic investment in a fintech partner is also another way to kind of stay close to a partner without having a engineering team, in and of itself inside the bank. So So we kind of have liked that model, and we've done things with companies like Mantle and Narmi and Alloy, who are experts in their field, and we've put those companies together in our platform to create this outstanding experience.
Mm-hmm. Interesting. That's just super interesting, and not a typical way to go about that. So then, like with the products you're offering, you talked about equipment finance, SBA lending. I mean, I presume, well, actually, you can tell me. I mean, like this has to be a digital experience because you don't have a branch for people to walk into. So, are you plugging in other fintechs into helping you do those kinds of things as well?
We're beginning to, but I would say that on the traditional lending side, in places like equipment leasing and government guaranteed or SBA lending, technology is less of a what I would call demand pull from the client's perspective. Mm-hmm. It's at a different place than it is on the consumer and small business front. So we've started to take a look at those businesses, but most of our technology and our technology platform changes have been on the consumer deposit gathering side. Right.
Yep. Got it. So then I want to talk about some of the partnerships you've had recently. Well, one of them was just last week as we're recording this. I read about you partnering with NerdWallet, and NerdWallet. We've had Tim Chen on the show earlier this year, actually, and really doing a phenomenal job in sort of the personal financial management and investment and advice and that sort of thing, but. They didn't have a savings product until launching with you guys. So just maybe we'll talk about that one and maybe talk about one or two others. But how did that come about, and what do you expect to get out of this NerdWallet relationship?
Yeah, so our philosophy on partnerships is kind of simple and straightforward. But we choose partners that we think would benefit from a relationship with a financial services company like Radius, and that their clients would benefit, right? So there really has to be a real partnership opportunity associated with it. We want to work with great companies that have this high level of commitment for customer service, that respects the regulatory environment, and that whose business model we think can be disruptive down the road. So we talk to a lot of companies, and NerdWallet is one that we've had a relationship with for years, a little bit more as an advertiser. But over the years, we've developed this kind of mutual respect for each other. And I think as part of NerdWallet has a wonderful brand, right? A great brand. And as they think about how they can expand the brand and what they do, they kind of came up with this concept of, should we own a savings account? Should we maybe own a checking account down the road? And if so, we'd like to partner with a company like Radius that we know can deliver us that outstanding customer experience. So we did that. And now NerdWallet clients who follow that brand and have developed a deep respect for it can open up a NerdWallet savings account, which is powered by Radius Bank. So it's a great opportunity for NerdWallet to provide a superior product to their client base, and an opportunity for us to take our savings account and supply it into the NerdWallet ecosystem.
Right. And so was that the same thinking? Obviously, that's on the consumer side. And we read about earlier this year about Brex, your partnership there with they've now got a bank account offering for small businesses, Brex Cash, I think they call it. And so was the thinking behind that partnership similar to what you just said for NerdWallet?
Yeah, I think that, Brex, another outstanding company, leaders and brand that's been built in a fairly short time with a outstanding product behind it. And we felt very strongly that this was a marketplace, that small business marketplace you heard me mention a couple of times, is where we want to be, and we think technology will play a bigger and bigger role. And the opportunity to see that Brex would be able to serve their clients in a much different way with a Brex Cash type account if their experience could be as good as it is for our clients, then yeah, what a great opportunity for us to partner with them. And that's frankly the Brex Cash account is going to evolve as 2020 rolls out into even a better product offering. And if there's years ahead of great opportunities with Brex and Radius for sure.
Right. Just on that, like I also want to, you go to your website and you look at, personal loans, you've got credit cards, you've got, as personal loans, student loans, mortgages, etc. And you click on personal loans, and it sounds like you've got a partnership with Credible there. And we know Stephen Dash has been on the show as well. We know Credible quite well. Is the whole idea there again to be able to offer these solutions through these partnering? I mean, tell us, because I know the first time you actually got on my radar was when you had a partnership with Prosper many years ago, and for personal loans. But is the whole idea there to where you can't kind of have your own product, or you don't want to have your own product, to give it to partner with companies like Credible?
Yeah, I think you've said that right, Peter. I think the idea is we want to be honest about where we're really good, stay focused on where we're really good, and that we believe is in several of our products that we offer today on the loan side for more of the commercial relationships and niche businesses and consumer deposit gathering. That's what we do really well, and Credible and team do a really nice job on the loan refi and origination side. And again, we like to work with high quality companies that tend to operate in the same space that we operate in, and that is that kind of broad segment of technophiles, people who like to do business on their devices. And so we kind of fell in love with those guys. They hit it off with us, and so we say, yeah, let's get into our marketplace and find a way for us to kind of make our clients' life a little bit better by saying, here's a top-notch, high-end provider of a solution for one of my clients, and I don't have any problem with matching them up because they are very good at what they do.
Right. So tell us a little bit about that marketplace concept then that you've got, and because obviously you don't just have Credible. Look, you've got Lemonade and Ladder and Bill Shark. It's on your website right now, and so is the whole idea here really just to, or you tell us what the idea is with the marketplace?
Yeah, I think it goes back to the whole concept of what do you want your financial services company to do for you, mm-hmm. right? So we've had this kind of comment and notion for the last 5-6 years is we need to improve the financial health of our customers, right? How can I make their lives better? How can I make personal finance or business finance or their business run better? And how can I help them every single day? And so the idea is that, well, geez, there's some really great fintechs out there that can help do that, and maybe if we can take those select few that we think can, make our clients' day and finance better, then let's give them access to it in a, easy place like our marketplace. Mm-hmm. So it's all about trying to improve the financial health or ease of our clients.
Okay. Yep, that makes sense. So I want to switch gears a little bit and talk about the digital banking space overall, because you really in the last 12 to 18 months there's been a lot of movement here, and interesting, you've sort of been you're a pioneer now in this space, and you see companies like Chime just this month have raised a massive amount of money at a massive valuation, and they're attracting millions of people. What do you think? So from your perspective, you've been doing this for many years, and then suddenly you see all these challenges coming up, with venture capital money being thrown around pretty openly. What's your thoughts on all of that?
Yeah, well, I think the first thing I would say it continues to validate our vision and the hard work that we've put into building the platform like we have. So we're excited to see smart investors invest in companies like Chime and Vero and others, because it validates what we've been doing. So it's all good. We're really not a company that's scared of competition. So I think it's better to have people out there doing this. We would welcome anybody to compare our product set to either Chimes or Vera. We do it all the time to make sure we stay in an industry leading. Competition is good. Competition is healthy, so that's all good. But we also feel like there's some interesting differential that we draw, and I would call it maybe, I hate to use the term, but maybe our maturity or where we are today in our work, and that is, there has to be a path to profitability, right? So right. I think that today, because we understand our balance sheet and we understand how to use our deposits, that we have a very clear path, and we are a very profitable company. We like, we're profitable. We're very profitable. So we've been able to do that, build this, industry-leading platform, and do it in a way that we have been able to be very profitable. And I think those companies will get there, and as they always do, or most of them do. But we feel like we've got a fairly good head start on that final part of it, and that is at the end of the day, there has to be profitability.
Right. So you think the fact that, obviously, I imagine you're not attracting millions of customers a year and new customers. It sounds like what you're saying, this is a good thing for the industry, even though you can't sort of keep up with these companies on a customer acquisition type operation, right?
Well, we could, but
right.
we need to. I think you need to. Quality versus quantity is something that we have preached for the last 2 years. We think the quality of the client that we onboard is very, very important for us. We aren't just chasing numbers, and I think that we've had a lot of learnings around that. So we like where we are, and we like the quality of the clients that we continue to onboard.
So then, beyond the partnerships we've already talked about, where do you actually find these quality clients?
Yeah, I think that is the final frontier here for us in the digital world, and that is kind of this, we call it the digital marketing challenge, and finding clients to open checking accounts when you had to go to a branch and it was open from 9 to 3 and people waited in line to open up a checking account. Well, those days are over. And so the question is, where do you find these clients virtually, and what type of marketing are you doing to be able to get that right client in the door, the quality client that you want? And that's more than just search engine optimization and, things like that. There's surely a part of it, but it is now becoming a much more, sophisticated environment that's coming from other sectors that have been in the e-commerce world for much longer. We are neophytes as an industry in the e-commerce world of marketing, but we're starting to see that kind of pick up some steam, and frankly, that would be where our focus is over the next, we think 12 to 18 months, is kind of improving the effectiveness of our digital marketing.
Right. Okay. Sure. So do you think, I'm looking at the community banking landscape, where there's still a lot of, small community banks with, a handful of branches. Many of them are, struggle in the digital world. Do you still think there is a role for these small branch-based community banks well into the future?
Well, it's not. I'm not sure I'm, the astute visionary to opine on that. And I think everybody's strategy is, strategy is good and you can execute against it. I think it's going to be a challenge for smaller branch-based community banks to grow. I think that's just a natural. You don't have to be, a Einstein to figure that out. I think it's going to be hard. I think just the natural demographics of it make it really challenging. Whether or not we need storefronts in general is probably more of the question of how e-commerce and other industries has evolved and what models work out there. But I do think as we look at the changing demographics and the changing consumer behaviors and our ability to kind of deliver all of the products that you get from a branch, via your device, I think it's a hard road, to be honest with you.
Right. Yeah. Okay, then. So we're running out of time. Last question. What are you working on? What's the future hold for Radius Bank?
Yeah, I think for Radius, there'd be two things that I would tell you. One is we're going to continue on this digital marketing kind of journey. I think you'll hear more from us about some of the great stuff that we could do with that. We're going to be a little bit more of pioneers in that than we are reading playbooks, so that's going to be interesting. I think the second thing you'll hear a lot more from us is on the SMB side, the small business side, where I think we've launched our business account. We're starting to market it much more effectively, and I think in both the partnerships and marketplace, you'll hear more from us in that segment. We love that as a technology demand pull segment next, and we'll continue to announce more partnerships. I think the fintech world is doing great. It's changed. It's been disruptive, and we think there's opportunities for us to participate even more.
Mm-hmm. Okay, well, I look forward to it. It's been a fascinating story watching this whole unfold, and how you've sort of created a way for. Maybe not every community bank can do this, but certainly you've managed to come out the other side doing well. So I appreciate you coming on the show today, Mike.
Thank you for all the nice things you've said, Peter.
Okay, my pleasure. See you later.
Okay.
It is interesting, as we discussed, there's so much money flowing into these digital banking startups beyond Chime and Vero as we talk, but there's dozens, it seems like, of these new digital banks that are attracting capital. And as Mike points out, the big differentiator that they have to hang their hat on is that they are profitable, because many of these companies that are in this space are nowhere near profitability. Some have even said, or one has famously said, that profitability is not on their agenda anytime soon. And the bottom line is, you can't keep raising money forever. There are going to be, I'm convinced, many of these companies that are going to do very, very well. And there's going to be several that just flame out because they can't get to profitability or a pathway to profitability quickly enough. So Radius is already there. Obviously, they're not resting on their laurels, and they're trying to keep growing. But they are, I think, a force to be reckoned with in the digital banking space. Anyway, on that note, before I sign off, I would like to say thank you to all the listeners. Thank you, everybody who has listened to the podcast this year. I think we've had some fascinating guests. It's been a really rewarding year from my perspective. I'd like to wish you all the best for the holidays, and we'll be back bigger and better than ever in the new year. And thank you very much for listening. Bye. Today's episode was sponsored by Lendit Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th, 2020 at the Javits Center in New York. Lending and banking are converging, and Lendit Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lendit Fintech, lending and banking connected. Go to lendit.com/USA to register.